for an even better take, we are joined now by no one else but the chairman of India's largest bank, Dinesh Kumar Khara, the chairman of the State Bank of India. Mr. Khara, thank you very much for joining us here on Business Today. The question that everyone wants to know is, the RBI has now, for the second time in a short period of time, hiked the repo rate, and it will get passed on in some format. Your thoughts on what you will do as a bank and whether it will be effective in controlling the inflation monster that we seem to be grappling with.
Yeah, I think if we really look at it, the inflation risk which were flagged in April and May resolutions of the MPC, they have actually now materialized if we look at the inflation numbers. So which means that this is something, inflation of course we keep on saying that it has become a global phenomena. So, and since the economy is coupled with the globe, so naturally it gets imported into the economy. So, and I think in such a situation when RBI is supposed to really ensure that the growth is maintained in the economy and at the same time the orderliness remains in the economy, perhaps this was warranted. And also it may not be out of place to mention that inflation trajectory across the globe is still not really receding. This is something essentially attributed to geopolitical tensions. So naturally in such a situation there is a need for a calibrated monetary policy action, and in that context I would say that inflation expectation has more or less got anchored, and there is adequate restraint as far as the pressures on the prices are concerned. So I think that that's the context in which this kind of a policy has been announced by RBI.
Before I go across to my colleague Abha, a quick follow-up, sir. What does this mean for State Bank of India customers? And you have such a large customer base. Are you going to hike the lending rate and perhaps the savings rate as well?
No, I think we'll have to, we'll actually be going through the data in our ALCO, and once we have a clear visibility in terms of the trend on the ground, then perhaps we'll be taking a call. Having said that, I would also like to mention that still there is excess liquidity in the system, and that is perhaps the reason why perhaps the way the interest rates are quoted may not be really transferring the full increase in the repo rate. But nevertheless, there are other loan contracts which are linked to the variable interest rate benchmarks, which could be MCLRs, which could be EBLR, which could be repo rate, etc. So for such loan contracts, it will lead to an increase in interest rates. But as far as contracting new contracts are concerned, there, apart from the base or maybe the benchmark, there would be some kind of a risk premium, which also is a function of the excess liquidity with each of the bank. So I think we'll have to perhaps wait and watch for the ALCO to meet, and then we will be in a position to take some calls.